Hey yo guys, how's it going? It's a Ripjaw back at it again. Some more crypto talk today. We're going to be focusing on Jerome Powell's conference or press conference he gave earlier today, along with some of the unemployment data that came out today. But first, before we get into that, we have to understand what the natural rate of unemployment versus the actual rate of unemployment is. And the natural rate of unemployment is kind of like the most efficient percentage of unemployment. So even though like a higher unemployment isn't necessarily the best for people with a job, if it makes the economy function more efficiently, it's beneficial for the economy as a whole. And that's where we get into the unemployment data that came out. This is a PDF. You can find this at the National or the Bureau of Labor Statistics. But pretty much unemployment rose to 4.2%. The expectation was about a 4.1%. The reason why it's not a big deal is because we are currently in what is called an inflationary gap from government stimulus spending from COVID. And pretty much what that means is that currently the natural rate of unemployment, which is the most efficient rate of unemployment for the current economy, is about 4.4%. And given the fact that we have a actual rate of unemployment of 4.2%, there is still a 0.2% range where we could increase unemployment and still maximize efficiency. So even if we increase by 0.2 to 0.3% of unemployment, it shouldn't be too much of a big deal. But once we start going above 4.5, 4.6% unemployment, that's when some concerns start to come in. And just some other news is that Trump says that Vietnam is willing to eliminate tariffs on U.S. goods, which is good and bad because these tariffs as a whole are. We really needed less uncertainty, and with these negotiations going on with tariffs and the quote unquote reciprocal not really being reciprocal and changing and up for negotiation, adding more uncertainty to the market is detrimental for the regular for markets as a whole, whether it's crypto or traditional markets. Some other stuff. The price of crude oil has declined, which should be some relief from the tariffs. I think whoever the Saudi Arabia coalition, the OPEC companies, just randomly announced that they were tripling the supply, which on the same day that the tariffs came out, so we can assume that that's going to be used as a negotiation tactic between those countries to lower tariff rates. Other things, Bank of Canada is cutting rates, or is anticipated to cut rates as the economy weakens, and we should see that as a positive for more rate cuts. I think now there's estimated 4 rate cuts for the year, which is good for cryptocurrency. Some more Bureau of Labor stuff. And now back to what I want to talk about, which is or the main part of this, which is the charts. This is the S&P 500 index as the candles, and then I overlaid Bitcoin's price. And as you can see, pretty much since October, we've been following similar correlation to the S&P 500 on the weekly scale. But in the past couple hours or couple days, we've kind of been decorrelating from the S&P 500. I'll get rid of this. So you can see the S&P 500 has been tanking recently. If you couldn't tell, it's about what? It's like I think it's been a 5% decline the last time I checked, which would be like a 50% decline in cryptocurrency. Fuck are these? Price range, there we go. But from the peak, 20% since Trump's gotten into office, and since March 25th, about a 11 to 12% decrease. Where you're going to Bitcoin, and since March 25th, Bitcoin's only down 4%. And from excluding this hype from the day before to today, we're only down 1%. Which brings us to the question, why has the correlation that we've been seeing between Bitcoin and the traditional markets. Well, why is it separated now? And what I'm going to use to kind of point my case to that is this Ethereum dominance divided by Bitcoin dominance. Now that we have the US M2 money supply, or kind of overlaid on this chart, you can see that there are some common correlations that you can see. Is that the Ethereum Bitcoin pair will enter the range low around the time we see some type of pivot, or range low, range high. It will pivot on its pair whenever around the same time that the monetary policy pivots. And a monetary policy pivot would be here, where you go from steadily increasing the money supply to taking money supply out, and that is called quantitative tightening, where the Fed is reducing its balance sheet, similar to how like if Bitcoin gets to $125,000, you will probably take some money out to de-risk yourself from that position and maintain some profits. The Fed does something similar. And the case that I want to argue is that cryptocurrency, because it is the majority of cryptocurrency is held by consumers, or the general consumer, whereas the majority of stock indexes, the S&P 500, NASDAQ, Dow Jones, are owned by the top 10%, that cryptocurrency gives you a better insight onto the general health of the consumer, just because the majority of the people purchasing altcoins specifically are people looking for a 10, 20, 30, 100x, and if they're capitulating from their positions, that probably means that they've sustained enough loss, or that they have a bill coming up, and so on. And that's why we've kind of seen these bleed to the range lows. And the reason why I think we haven't seen a bleed from any Bitcoin pairs, or just the general crypto market, because I think Bitcoin's currently up about 1%. It's not negative today. I don't know what the exact number is. You can go back in the video to see that. But the reason why I think that the crypto market hasn't crashed the same way that the traditional markets have is because the effects of the tariffs haven't been applied to the consumer yet. That might take a couple months, because we're looking at a weekly chart right here, and from breaking down this resistance line, which we have just broken down around about the 0.14, 0.13, it took Ethereum another 33 weeks to get above it. And I would assume in about 33 weeks, these reciprocal tariffs, the average American would start feeling the impact of them, which would cause a similar decline into the range low that we saw here. And once we get a Fed monetary policy pivot, I want to extend this line to make it a little more easier for you to see. But once we get a Fed monetary policy pivot like we did in here, right there, so pretty much you would expect to see this steadily increasing, which it is starting to do, but we're looking more for a straight vertical line that will result in a vertical reaction from the Ethereum Bitcoin pair. So what I'm saying is that eventually, if we switch from quantitative tightening to quantitative easing, or if we just stop quantitative tightening altogether, and that includes mortgage equities. Make sure to include mortgage equities. Don't just include traditional equities, because mortgage equities are also on the Fed's balance sheet. But once we see that, we should see some type of double bottom, like we saw here on the Bitcoin pair from Ethereum, which should signal a start to a counter trend altcoin rally. Do I know when that is going to happen? No, but I would assume we are on a similar time frame to last cycles. I would rather side with history, because a lot of the times history rhymes, or what happens rhymes. It's not going to be exactly the same, but if you use about a 33 day price expectancy, that would leave you to November of 2025. And what do we know about October, November of 2020 of post-halving years? is that most of the time in those in that part of the cycle, we get some type of altcoin rally. And yeah, that's pretty much all I have for today. I hope that you guys enjoy this video. Please make sure to like and subscribe, and let me know if there's anything that you don't understand. If you want to talk a little bit more, if you want me to put out some more specific videos about monetary policy and how that affects cryptocurrency, whether that's a video just breaking down what quantitative tightening is, what quantitative easing is, what the M2 money supply is versus the M1 money supply, and so on. So pretty much, yeah, if you need any extra information, I will always put those videos out. I'm always looking for new video ideas, and if you guys want to help pitch in some ideas, take some of the work